Mr. Lawal, put your video on. Yes. Oh, welcome, Mr. Lawal. Welcome. I guess the coordinator, Mr. Lawal, is set for us. And
okay, sir.
Time
1 more minute to go.
Yes, we have just 1 more minute, so we can continue. Thank you.
You're welcome, sir.
Let's just have a few minutes. Coordinator, at the end, let's
Yes,
just
sir. Yes, sir.
so that we can wrap up the whole program.
Yes, sir. Yes, sir.
Thank you so much. Nice session.
Hello, welcome, ladies and gentlemen, to the final session of this program. We hope you had a very nice lunch and you are, very ready to take the last segment of this program. The last segment of the program is discussing the new auditor's report. Like we all know that the work of the chartered accountants revolve around standards. And we've treated standards that have to do with reporting, financial reporting. So we'll also be discussing another standard here, but in this case now to be in respect of audits. This will be related to audits. So to lead us in this discussion, we know the area of audit is everybody's area as chartered accountants, but of course we have some people that are specialists in this area. So who may need to take these aspects of the reporting are very, very important. So to discuss the new auditor's report, that's what is new in this auditor's report. We have, Mr. Olatunbosun Lawal, who happened to be from PwC here in Nigeria, is going to take us through what is new in the auditor's report. So precisely, we'll be discussing majorly ISA 701, the key audit matters. We encourage you to make the class interactive, as the previous two discussants were very fantastic, and we hope that the last one too will be, very, very good. So it is on that note that I want to invite Mr. Olatunbosun Lawal to take the lead in this discussion. Lawal, you are welcome.
Thank you,
Hello,
Mr. Moderator. Can you, am I loud and clear?
No. But yes.
Am I loud and clear? Can you hear me?
You are clear, very clear.
We are hearing you.
Awesome. Okay.
Hello, Mr. Lawal.
Yes, please.
Hello, Mr. Lawal. Before you go ahead, please kindly set your ground rules. What we have been following up to now is that responses will come via chat, so that you pay cognizance to whatever is coming to you through the chat box. Is that clear?
Awesome.
Okay, so that we make this interactive. Yeah.
Awesome.
Okay.
So that's how we go. That's how we go today.
Yeah.
Please let's hit the mute button. If you want to ask any question or make any contribution, kindly use the chat box. Drop your message. If you want to speak, ask us to unmute you. We'll be happy to do that. So this is just to minimize interruption that may be coming from unmuted systems. Okay, having said that, I would want you to pay attention for the next 45 minutes, where we'll talk about a key section of the audit reports, which is a section that relates to key audit matters. So we'll be having conversation as to, we'll be introducing you to the key audit matters. We're talking about the scope and what the objectives of the key audit matters are, i.e. what do we seek to achieve with that section of the report. We'll also be talking about the procedures to determining what is key. How do you identify the matters that are key, right? So what are the things you need to do? What are the things you need to look at? What are the procedures and considerations that goes into determination of what are key audit matters? How do you communicate this key audit matters? How do you communicate this matters in the report? How do you structure it, right? And how do you document them to as well from an auditor's perspective? So that's the content we have for you today. And without further ado, we just want to get straight into it. Okay. Now, in terms of the objective, right, the ISA 701 basically relates to the responsibility of an auditor to communicate key audit matters. In short, it is called CAM, K-A-M, right? And the essence of this standard, ISA 701, is to address how the auditor goes around in determining what is key and how it is communicated in the audit reports. It is also important to also consider the form and the content of the CAM. What form will CAM take? What should be in there? Now, the essence of CAM basically is to improve information that is provided to users of the financial statements. Also to increase the transparency of the audits. So prior to when we have CAM, the responsibility to, it's really difficult to review the entire audit report, sometimes running into 200, 300, 100 of pages. It is always difficult to review that number of pages to identify what is key for the auditors, right? So other than the auditor's opinion, the responsibility is rests on the users of the financial statement to go through that many pages, summarize them, and extract what is key. And at times it may not necessarily be quantitative. At times it may be qualitative, right? So it becomes difficult for users of the financial statement to fully appreciate, right, what is key, right? And that is why this standard was released, so that within the audit report, the auditor is expected to report the key audit matters. And key audit matters are the key issues, right, that would provide useful information to users of the financial statements. And the whole essence is to further increase or further encourage engagement between the investors and the management. So there are topical issues. These are the big issues. These are the critical issues that are affecting the company. And it becomes easy for a user of the financial statement to, at a glance, get a sense of areas that they need to engage management further on, right? So the essence of the key audit matter is to increase the informative value of the financial statements, is to enhance transparency in terms of events that are affecting the business, the company, right? So that is the essence of CAM, so that those who are not accounting savvy, those who do not have the background to review critically and identify crucial areas of audit, crucial areas of event that are affecting the financial statement, can at a glance review the CAM, highlight key issues that are affecting the company, and that then becomes the basis for conversation. Now, having said that, it's also important to note that it is important that listed companies comply with ISA 701, right? So they are mandated, companies that are listed, right, are mandated to present CAM in their audit reports. Now, for the companies that are not listed, the auditors may voluntarily decide to publish the CAM, right? But the management or those that are charged with governance can request that the auditors publish the CAM, present the CAM in the auditor's report. So whilst it is mandatory for listed companies, it is not mandatory for non-listed companies, but they can, in their own instance, decide to include the CAM in their audited financial statements. What is the CAM and what is the CAM not, right? It is important to, and this is in a bit to create context, right? So that the CAM is not mistaken for what is not, right? So having discussed what exactly the CAM is, we'd like to also, to avoid misapplication, to avoid misinterpretation, would like to talk about what the CAM is not. The key audit matters is not a substitute for disclosure in the financial statement, i.e., if you have a matter that you have decided to include in the CAM, it does not mean that you would not present public disclosures as they relate to that matter. So for example, if measurement of financial assets is considered to be a key audit matter in a particular audit, yes, present them as a key audit matter, but that does not stop you from making the required and necessary disclosures that are required for financial assets in accordance with accounting practices, right? So key audit matters, the section of your audit report that relates to key audit matters, it is not a substitute for disclosures that are required in accordance with International Financial Reporting Standard. Right. It is also not a substitute for the auditor's qualified opinion. And I would explain what this means. Where you have an issue that forms the basis for issuing a qualified report, IS 701 is saying, don't disclose, go ahead and report and qualify that account on the basis of that issue. Don't issue a clean opinion and dispense the issue in the CAM. Some say, oh, because I've included it in the key audit matters, I can as well go ahead and issue a clean audit report. So if there's an issue that would typically lead to an auditor issuing a qualified opinion, go ahead and issue a qualified opinion. Don't present a clean opinion and dispense that issue in the CAM. No. Right? So that is another thing. It is also important that it's not a substitute for reporting in accordance with going concern. So if you have to report, if there are going concern issues, report that under the required section. Don't put it under the CAM. And it should not be a substitute for reporting the financial statement on the going concern basis. But don't report the financial statement on a fair value basis and go to the CAM and say there's a going concern issue. No. Right? So the issues that are reported in the CAM, right, are not a replacement for the need for an auditor to issue a going concern for where there are going concern issues. Now, it is also not a separate opinion on individual matters, right? So CAM is not a section where the auditor forms an opinion on individual matters, no. The essence of CAM is to say, during our audit, these are issues that we think are key. We want you to know as users of the financial statement so that in making decisions, you can also bear in mind these critical issues that we encountered in the course of our audit. So basically, you are enhancing the informational value to users of the financial statement who may not have the technical skills to summarize the many pages and throw out critical matters that may be affecting the company. Okay, so how do we determine these key audit matters? So I've been saying key audit matters, and I know some of you will have it at the back of your mind and wondering, what is this young man saying? All the issues that comes up in my audit are key, right? I have management letter points, and all the issues in my management letter point are important issues. So how exactly do we extract the key audit matters to disclose in the audit reports, in the annual reports? Okay, so we have a guide, and the guide, the ISA 701 says that the auditor shall determine from matters communicated from those charged with governance. So the universal set of issues are the issues that are communicated from those charged with governance. So you would have communicated some issues to those that have responsibility for governance. Now, among those issues that you had communicated to them, which matters required the significant auditor's attention? The matters that require significant auditor's attention among the issues that have been communicated to those charged with governance is what would qualify as your key audit matters. In making this determination, there are a few things the auditors must bear in mind. In making this determination, in determining the universal set of the matters that are communicated with those charged with governance, the auditors have to identify areas that are vulnerable to the risk of material misstatements, or areas that are subjected to significant risk, right? So for a bank, an area that is subjected to significant risk will be interest income. Another area would be impairment on financial statement. Now, for FMCGs, an area that is subjected to significant risk is inventory, right? So, for energy, an area that is subjected to material misstatement would be property, plant, and equipment, will be receivables, right? Now, and you would have typically, when you do your audit planning, you would have identified those areas that pose significant risk to your audit. Now, those are the areas that would constitute areas that you communicate with those charged with governance. Also included in the matters that are communicated to those charged with governance are those areas that involve a lot of judgment, areas that are judgmental. For example, provisions. For example, fair valuations of the asset. For example, calculation of impairments. Right now, those areas that involve a lot of the documentation, the judgment from the auditor is another area that would form part of the matter that are communicated to those charged with governance. Now, when you have a repository of all of these issues, the next thing is to identify which of these issues is significant. Now, how do you determine which one is significant? There are several things to look at in determining what is significant. One of them is the amount of time that an auditor spends on those areas, and the level of seniority of the audit staff that managed or handled or audited those issues or tested those areas. Those are how you determine what is actually significant to the audit. So note it, one, areas that are areas of material misstatements or that exposes the company to significant risk, and you typically would have identified those areas when you do your audit plan. Right. Other areas are areas that involve significant judgments, right? And when you then have a repository of all of this, you begin to look at which of these issues are actually significant, right? So that's how you determine what the key audit matters that goes into the annual report would be. Okay. So to drive home the point that I've been trying to talk about, we have this diagram, right? So out of this, we have 50 issues that are communicated to those charged with governance. So you typically have areas of significant risk, areas that are vulnerable to the material misstatements, areas that involve a lot of judgment and all of that. So let's say that is 50. right? So you then begin to look at which of these areas requires a lot of, significant audit attention. Oh, so that is 32. Of these 32, you then ask which of these areas is most significant during the audit. In which of these areas did you spend a lot of time? Which of these areas did you commit the most senior resource, right? Then that comes down to 3. That gives you a sense of that 3 then becomes what you report in your key audit matter section of the annual report. And the number of key audit matters you have will typically depend on 1, the size of the business, right? To what extent do you have different business divisions, right? To what extent do you have different subsidiaries? What kind of different businesses do you do? How complex is the entity? Have the entity involved in financial instruments that present different kind of risk to the company? For example, derivatives. Have the company bought derivatives that have the potential to introduce different kind of risk to the business that you need to bring to the awareness of users of the financial statement? The nature of the business environment is very key. In complex and developed nations, they are likely to have more key audit matters than in business environment where activities are basically plain vanilla. It is important to reiterate again that the matters in CAM do not relate to qualification. If the matters in CAM would typically form the basis for issuing a qualified report, then those matters should be in the part of the annual report that relates to audit opinion. I repeat, if matters that are included in the key audit matters are matters that form the basis for issuing a qualified audit opinion, then those matters should not be in CAM. Rather, they should be in the paragraph of the audit report that relates to audit opinion statements. Do we have any question at this point before I proceed? Do we have any question? Okay, awesome. Okay, so what are the examples, right? So for example, areas that exposes the companies to significant fraud risk. Those areas, of course, will be key audit matters because of the risk of fraud. Goodwill, because of the uncertainty in valuing goodwill, right? Goodwill valuation comes with a lot of judgment that can, impose a lot of, that can, threaten the reliability of the financial statements. Right, valuation of financial instrument transfer is quite highly judgmental. There's a lot of estimation uncertainty that comes with valuation of financial instruments. The same thing too with fair valuations too as well. The effect of new standard is also very important, right? If you have new standard that are yet to be effective, but when they become effective, would have a lot of impact on the financial statement. It makes sense to communicate to stakeholders well ahead, that there is a standard that has been issued. It is not yet effective, but when it becomes effective, you pose this risk to this company. So if there's a need to have a capital plan, if the standard will affect capital, then that becomes a very useful information to stakeholders of the business that, okay, when this standard becomes effective, it's likely that capital will be eroded, and we need to begin to look at how we can have a capital plan in place. The same thing too for provisions, like I mentioned earlier, because provision is an estimation, is an estimate. The uncertainty that relates to that estimate may present a lot of threats to the relevance of the financial statement. So these are common examples of what you would find in a typical CAM. Now, this is not exhaustive. There are a whole lot of issues that you can find in the key audit matter sections of the annual reports. Okay. How do you communicate the key audit matters? What are the considerations that comes in when you consider how key audit matters are communicated, right? Okay. In your annual reports, there will be a section in your annual report that must be called key audit matter. So there will be a subheading in the annual report that is called key audit matters. The next paragraph will be exactly what you have here. The introductory paragraphs after you have that subheading, key audit matters, would be exactly the 3 bullet point that you can see. So the minute you have key audit matters, you underline it, the next statement will be key audit matters. You need to describe what key audit matters are. Key audit matters are those that in the auditor's professional judgment, what does that tell you? The auditors have the responsibility to determine what is key. So key audit, and you must literally write this in your under the key audit matters. That key audit matters are those matters that in the auditor's professional judgment were of most significant in the audit of the financial statements. Those matters were addressed in the context of the audit of the financial statement as a whole and informing the auditor's opinion thereof, and the auditors do not provide a separate opinion on those matters. It is not a substitute for expressing modified opinion. If you have to issue a modified opinion, go ahead and issue it. Don't issue a clean opinion and dump the matter in can. Right. So this must literally be under the subheading key audit matters. So once you have key audit matters, this is what is expected to follow as under the subheading. Okay, now, so having said that, the description of each key audit matter, so that means that there can be more than one key audit matter. So once you have the heading key audit matters, you have that introductory paragraph. The next thing is to then state the key audit matter one by one. Right? So you state the key audit matters in the relevant audit, in the key audit matter section of the annual report, and you can include a reference, right? You can include a reference to the disclosure that relates to that key audit matter under the key audit matter. So if my key audit matter is impairment of financial assets, what we are saying is here is that you can include a reference to the disclosures that relate to key audit, that relates to financial assets. I'd like to show you a sample of what key audit matter look like for those who have not seen it before. So this is a sample key audit matter. So highlighted is the paragraph I told you. You remember that paragraph? So this is the key audit matter. So this is an annual report, right? Independent auditor's report, right? Now this is the subheading that I told you about, and this is the paragraph I told you. So you must have this paragraph, exactly what I showed you, right? Now you can then state the first key audit matter, impairment of loan and advances. Now I'm coming back to this slide again. I just want to show you how a key audit matter look like. Okay, now you must state in the key audit matter why the matter is considered to be key. You must state, you must explain to users of the financial statement why, in your opinion, you have considered the matter to be key. I think I have some charts. Oh, okay. Can you see my screen now, please? Can you unmute and talk to me, please?
No.
Mr. Emmanuel, can you see my screen now?
I can see your screen.
Oh, can any other person see my screen? Can any other person please mute and let me know if you can see my screen? Oh, okay.
Yes, we can see the screen.
Yeah, so Mr. Emmanuel, you may need to log out and log back in. All right. Now, having said that, two things are important. Your CAM must tell two stories. Your CAM must tell the story of why the matter is considered to be what? Significant, i.e. you must make a justification for why you have decided to disclose that matter as a key audit matter. You must then tell us what you did to resolve the matter that you raised. So why must be clear in your CAM, and how you have resolved the matter must be clear in your account. Again, please let me know if you are unable to see my screen. I want to show you something. So let me know if you are unable to see my screen. So if you look at this, this is the Y. Can you see my screen? Can you see my screen?
We can.
Good. Can somebody read what I highlighted? Can somebody read what I highlighted? Can somebody read what I highlighted to be sure that you can? Some people can see my screen, some cannot see my screen. Okay, so let me just let me unshare. Okay, so let me unshare and reshare. Can you see it now?
Yes, yes.
Fantastic. So this is the key audit matters. This is the introductory paragraph I spoke about. This is the first key audit matter. Now, this is why this matter is key. So can somebody read what I highlighted? Can somebody read what I highlighted, please?
This is considered a key audit matter because of the materiality of the loans and advances, balance net of impairment, 153.6 billion naira, and significant use of management judgment in determining the timing and the recognition of impairment based on expected credit loss ALC model.
So can you please type why from what you have read, why this is a key audit matter? Can somebody type why this is a key audit matter? Yes, there are two reasons here: judgmental, fantastic. There's another reason. Thank you, materiality. So those are the two reasons why impairment of loan and advances to customers is considered. It's 2.2 billion. That's a lot, and it's estimating that amount also involves a lot of judgment. So those are the two reasons why this is considered to be what, Judge, a key audit matter. Now, it didn't stop at that. They also talk about how this matter, yeah, thank you, inconsistency year to year, fantastic. They also talk about how these matters were addressed. So let me just read the first paragraph. We evaluated and tested the design and operating effectiveness of control around the expected credit loss model, which is used to make that estimation, by assessing the reconciliation between balances on the loan application system and balances on the ECL model. We evaluated how management have determined default definition against the 90 days past due reputable presumption, as well as other qualitative default needs. So this is you telling users of financial statement how you got comfortable with the uncertainty in the key audit matter. Okay, so let's go back to class. Can you see my screen now? I've moved back to the other slide, to the PowerPoint slide. Is this something you can see?
It's not coming up yet.
All right.
No, the same screen. We see.
We are there now.
Awesome. So you need to tell us why the matter is considered to be a key audit matter and how you have dispensed that matter in the course of the audits. So let's move on to other matters. So we have an example, although I've shown you a sample key audit matter, but I'd just like to talk about another example. So this company, BTT Group, upgraded its core banking solutions. Now, we all know that when you upgrade solutions, especially banking solutions, most times you have a lot of systemic risk issues with the systems and process and irregularity, and you need to do a lot of reconciliation, especially for the data that have been migrated, right? Now, because of the upgrade of the core banking system, in the course of the audit, they have identified a risk, and the risk relates to IT systems and control, right? And the risk is the fact that automated accounting procedures may not be operating as it should because you had moved from one banking system to another banking system. Now, the initial banking system perhaps handshake to an accounting application, and it would take a lot of time to migrate balances from the new core banking system to the new banking, to the new to the accounting application. And there's also a need to reconcile the numbers that is coming from the core banking application and the number that is going to the new accounting solutions. So there's a risk, and the risk is that automated accounting procedure may not be operating correctly. Now, that is why they have flagged information technology system and control as the key audit matter. And how have they addressed this matter? So let's look at the second paragraph, how this matter was addressed. Let's look at the second paragraph so we don't do a lot of reading. Now, with the support of our IT specialists, of course, we need IT support for banking audits. We tested these controls by examining whether changes made to the system are appropriately approved and assessing whether appropriate restrictions were placed on the core system through reviewing permission and ensuring that responsibility of those granted to that access. And where we identified the need to perform additional procedure, we place reliance on manual controls such as reconciliation between what systems, the old system and the new systems, or by performing additional testing such as extending our sample size. So if before your sample size is say maybe 100, because of this increased risk, they had increased, and that is how they have addressed getting comfortable. Normally, if it was the old system, they would have limited their sample to 100, but because of the increased risk of migration, they had increased the sample to 500. Now you are explaining to users of the financial statement how in the course of your audit, you have addressed the significant risk you identified. Now, is this something new? No. So CAM do not introduce an additional burden. These are procedures you would perform in conventional audit process. What the CAM has introduced is the need for us to disclose and communicate and increase the informational value of the audit reports. Okay, so a few other things we need to quickly talk about. We are pressed for time. There are instances where a matter that you have identified to be a key audit matter is not communicated in the audit report. So we are permitted in some instances not to communicate matters that the auditors would have identified to be a key audit matter in the audit report. We just want to have a sense of those instances. Now, for example, the law may preclude the auditor from disclosing a particular matter. Now, in some instances, the auditor may also have, may not have communicated because of the adverse consequences that doing so would have. And if the negative effects, right, outweighs the public, so we are talking about cost to the public, burden to the public, and benefit to the public. So if the benefit to the public is less than the cost to the public, or the cost to the public exceeds the benefit the public would get, the auditor may determine not to disclose that matter. I mean, this is in extremely rare circumstances. So, for example, a company that sells weapons to another company While that may be a very important information, but it is a sensitive information that may not be communicated as a key audit matter on the face of the annual report. Okay. Now, so there are different ISAs, like ISA 1, ISA 701 is just one of the standards that relate to audit report. There are a few other standards. Now, what we want to talk about here is that how does the key audit matter standard interact or relate to those other standards, right? Now, a matter that any issue that have the capacity or that have the potential, an issue that have the potential to lead to qualification of the annual report, or an issue that threatens the going concern of a business. Such issues are by their nature key audit matters. Any matter at all that have the potential to lead to the qualification of the audit report, or that cast doubt, that threatens the going concern assumption of an entity, such matters by themselves are key audit matters. However, such matters should not be disclosed under CAM. They should be disclosed in the section that relates to issuance of audit opinion. Right? However, you can include a reference under the CAM, but don't describe those matters under the CAM, because that is not the essence for CAM. The essence for CAM is to enhance the informational value of the financial statements. So don't describe matters that are leading to qualification of the financial statement. Don't describe matters that threaten the going concern of an organization in the CAM, even though they are key matters. Describe them in the sections that relate to them. But you can refer to them in the CAM. Let me check if I have questions. Okay, I don't have any. All right. So how about what then happens in an instance where there are no key audit masters to communicate at all? Or the key audit masters that there are those matters that we discussed earlier, those matters that you are forbidden to disclose by law, or you have assessed that the public or social burden of disclosing them outweighs the public benefits of disclosing them. So if you have those matters, or if there are no matters at all, what do you do? The first thing you do is to discuss with the engagement quality review partner, if you have one. If it's an engagement that have an engagement QRP, right? If you have one, discuss with that partner that look, there are no key audit matters, or the key audit matters that there are, I think it's best in the interest of the public not to report them. Once that has been done, you then communicate your decision not to report any key audit matter, or your decision that there are no key audit matters. You disclose those information to those charged with governance. In the key audit matter section, now, if there are no key audit matters, it doesn't mean that you would not have a key audit matter section in the annual report. You will still have a key audit matter in the annual report, whether or not there are key audit matters. Right? So you go to the key audit matter section and state there that there are no key audit matters to report. Okay. Please let me know if I have people following me. Are we two together? Can you just type yeah if you are together? Can you type yeah if you are together, please?
Yeah.
Okay. Awesome. All right. So the auditor shall communicate with those charged with governance they shall communicate those matters that the auditors have determined to be key audit matters, or depending on the facts and circumstances of the entity and the audit, the auditor, they can communicate the fact that there are no key audit matters in the audit report. We said this already. Documenting key audit matters. Documenting key audit matters. You know, and this is important. When we go to review other countries, when we go to review other audit firms in other countries, one of the things that ISA 701 requires is that anything you are putting in your key audit matters, there should be an evidence of the work that you have done to make the conclusion that you are making in the key audit matters, i.e., there should be a connection between the key audit matters and your audit documentation. So don't tell us you have done this. I want to see what you, because what you put in the key audit matter will be summary. I want to be able to connect what you have in the key, how you have addressed the key audit matter. I want to see a detailed explanation in the documentation. So there should be a section of your documentation that forms the basis for what you have in the key audit matter section of your report. Right now, those matters that required the significant auditor's attention and the rationale for the auditor's determination as to whether or not to include those matters in accordance with the auditing standards. So you must state all the issues that came to your attention and the rationale for including those that you include and the rationale for excluding those that you excluded. So all the matters that are key must be shown. The matters that you included as key audit report must be shown as the justification of why you think they are key, as well as those that you excluded and a justification of why you think they are not key. Right? And where applicable, you should also document the rationale for determining that there are no key audit matters to communicate. Or you should document the rationale for concluding that it's in the best interest of the public not to document those matters. And where applicable, the rationale for the auditor's determination not to communicate in the audit report a matter determined to be key audit matter. Okay, so that draws a curtain to my section. I'm happy to take questions if there are. So I can give back a few minutes. I can give back about 30 minutes.
So if you have questions, you can unmute yourself and then speak to the resource person.
Okay. So that effectively draws a curtain on my section. I hope you had a thing or two to pick. So thank you, everyone. Moderator, over to you, sir.
Can you check the chat box? Are there no?
There are none. The chat box is live. There are none.
Okay, ladies and gentlemen, I wish you there are no questions, comments before we move on to another session, so to say.
Thank you, coordinator. Hello?
Any other question? Okay, I've been seeing yes, thank you. Thank you very much. Hello, sir, Mr. Adekwate.
Yeah, Thank you, coordinator.
Yes, sir.
It's been a hectic 2 days of intense interaction. And let me start by recognizing that the president of the institute is still with us. The vice president is still with us. And indeed, we have council members still with us. We have chosen ISA 701 to end the session so that it will be on a lighter mood. We will end and start the weekend on a very light mood. I thank everyone for the participation in this exercise. This is master.
Sorry, Ariel.
Yeah.
If you look at the chat area, there is a question coming from Mr. Alpha Jallo.
Okay.
Maybe if we can view that quickly.
Mr.
Lawal, can you
Lawal,
see that question?
Lawal, I hope you are still on. Mr. Lawal.
Yes, I'm on.
Check
So
the chat box.
I've seen the question. In determining the key audit matters,
Okay.
do you need to consider the impact of the issues on the financials? Of course, you need to consider the impact of the issues on the financial statements. Don't forget we said issues that expose the company to the risk of material misstatement. When there are material misstatements, the financial statement is affected. Areas of significant risk, fraud. When there is a fraud, the financial statement is affected, right? Or areas that require significant judgments. On items of financial statement that are judgmental, the financial statement is affected because what you have in the financial statement will be based on the judgment of the auditor. If another person have another judgment, you may be having something different in the financial statement. Again, it then means that judgment impacts the financials. So yes, in determining the CAM, you need to consider impacts of these issues on the financial statement. And in considering the impact, you are looking at the risk of material misstatements, the risk of significant risk, right? You are looking at significant operational, financial, credit, liquidity risk. You're also looking at areas of significant judgments. In all of these, you then begin to look at which of all of this is most significant. Which of these took my time as auditors? Which of these require the deployment of senior auditors, right? This could point to the areas, the issues, the judgment, the assumption, the risk that are significant. Those risks are what would eventually find their way into your CAM. So not all the issues that impact your financial statement, not all of them. Otherwise, you'll be having the entire annual report, you'll be having CAM as the entire annual report. So not all the issues, you need to pick out of those issues, right? And what are the basis for making the selection? I just explained risk of material statements, areas that exposes the company to significant liquidity, operational credit risk, and areas that involve a lot of judgments, right? Those areas that require a lot of auditors' time, areas that require the deployment of senior auditors, those are those issues that come up when you are doing your audit planning. Those are the things you look at to determine what eventually comes into your CAM. So not all the issues, there are criteria that need to be considered in narrowing down what finds its way into the CAM. Does that bring clarity to your question, Mr. Alpha? Okay, yeah, thank you.
Yeah.
Okay,
Yeah,
over to you.
Thank you very much. Thank you very much. Are there other questions? There's another one there.
Yes, it is mandatory. I said that earlier. It is mandatory for listed companies, but for companies that are not listed, the auditor, it is discretionary. It could be at the discretion of the auditor or discretion of the management themselves.
Are we done with the questions?
Okay, I think there's one more. when there is a close call over the going concern, which has been documented,
which have been determined.
Okay. So if a company is threatened by going concern, it's clear. If a company is threatened by a going concern, clearly it should be treated in the opinion section of the report, right? Not CAM, right? So it depends on your assessment of what the going concern issues are, right? So if you think there's a real threat that may affect the ability of the company to continue to operate, right, under the going concern assumption or basis, then you need to disclose that in the audit opinion section of the annual report. What about public sector entities? So again, for public sectors, it is discretionary. The standard do not mandate public sector companies to comply with ISA 701. So it is again discretionary.
Yeah, thank you very much, Mr. Lawa. Mr. Rekpate, the floor is yours.
Thank you very much, Mr. Olajuwon. Let me express my sincere gratitude to the president of the Institute, the vice president, council members, the chief executive, the technical manager, and all members of the Institute for making this exercise worth our while. Because when we conceived this program, we were concerned that if it would not be participatory, that we may not have achieved our goal. But yes, please, may I kindly request, before I call on the chief executive and the president to close the session, the program totally, may I request that we all complete the evaluation forms. And above all, I want us to consider if it is worth our while that we take the master class 2 with this mode of presentation, because it will be of no use if the audience is not satisfied with it. So I would appreciate if we put effort on the evaluation and making recommendations that we can use to improve the program. Number 2, we shall send a link. I guess by Monday, we will send a link whereby, because of the load, the size of the document, we will send a link whereby all participants can access